I'd like to introduce our first speaker. And as I mentioned, unfortunately, it's not Mr. Rehan Ali. Shizad Shizam, are you there? And if I can ask our other speakers to put their webcams on, that would be fabulous. Hello, Shizad, how are you?
Hi, good afternoon, Kevin. Thanks for the introduction.
No problems at all. Thank you. So obviously, it would be great just to get a 1-minute overview about yourself, and then obviously the area that you cover for the listeners.
Okay, my name is Shahzad Shamim. I'm the area head in business banking under Wholesale Banking Group, looking after Northern Emirates and Fujairah region. And for the last 14 years, I'm with NBF. And I have experience of more than 20 years in the UAE banking industry. Like I worked for ENBD, Mashreq Bank, and now with NBF.
Thank you very much. I guess one of the questions, just to give an overview for our listeners, is what do you think are some of the sort of general challenges that some of the SMEs are mainly facing at the moment? It'd be nice just to get a snapshot, really.
I think there are a lot of factors what the SMEs are facing in challenges in terms of like normally the banks are asking for tangible security for the SME, and with a profitable track record like 3 years profitable they have to show. Plus where they get their audit done is not a creditable audit firms. So these are challenges what the SMEs are facing. And there are also few products in the market in the SME which are collateral free, but those are very expensive. So I think in and out the SME is facing a tough time because not all the banks are that comfortable and that approachable like we are there, because NBF have a dedicated department of SME business banking for over 3 decades.
Okay, so it sounds like obviously there's the added level of protection that's required there from the financial institutions, obviously given the backdrop of maybe 10 years ago, but also some of the COVID challenges where people may have struggled and they've given some sort of extra weight. Okay, great. And is there, how do you sort of foresee as well, just very quickly, the growth is going within, I guess, maybe certain industries? Are there some industries that are accelerating more than others? Just interested to sort of get a snapshot.
I think if you see the construction industry is growing at a rapid pace because we can see a lot of infrastructure getting done within the UAE because they're getting ready for the next challenge over there. And plus what we can see like oil and gas industries are going for a boom, plus trading activities, plus manufacturing sector I've seen because people in other part of the country, especially Asia, which is not that great for their doing business. So they find UAE as a most business friendly environment. When they can come in, take a asset for a long lease and start the business. So even if you say trading wise, we are a great hub because Dubai has been there for trading for all these years.
Yes. Okay. Very good. And then finally, obviously this sort of webinar is to sort of cover Islamic and where that heads. And I guess one of the questions there is, have you seen or are you seeing certainly a possible shift or interest from people that may have been in conventional type of products and are wanting to either move or to consider into sort of Islamic opportunities?
Yes, very much. People's approach is changing very rapidly, especially after the pandemic, because now even we are getting requests from customers for Islamic products. Even though they have conventional, they want to go for Islamic because being this most of Islamic country, people try to ask for Islamic products because their perception or their belief is like there is more transparency in kind of overdue charges or something, and they feel comfortable from within themselves. So they prefer Islamic banking, and what I believe, like over the next 3 to 4 years, Islamic will be coming with a great boom, like the Malaysia. in UAE.
Very, very good. Well, Shazad, thank you very much. We're going to get you to come back afterwards. So please leave your webcam on, but I'll let you turn your audio off, and I'll get you to come back for the Q&A afterwards. So thank you very much for that. I'd like to introduce our next speaker. Tariq, are you with us? Tariq Khan?
Hi, Gavin. Yes, I'm here. Can you hear me?
How are you? Okay.
Very good. Very good. Thank you.
Very good. Do you want to also, just for the listeners, do you want to just take a couple of minutes just to sort of introduce yourself, give an overview, and then obviously I can go into a bit of sort of questions and a bit of background on what you're discussing.
Sure. Absolutely, Gavin. So my Islamic banking journey has been a period over 15 years now. It's around 2007 when I first started working in Islamic finance in Kuwait. Progressed to Oman, and then now in Dubai. So over a period of 15 years, I have worked across geographies in the Islamic banking domain. So I have been with NBF Islamic for the past 6 years. I'm a unit head here in the wholesale banking group within Islamic banking. And
Sure.
So that's essentially a bit of a brief about myself.
Great, thanks so much. Well, I know we've got two exciting areas. So I think the first thing we're going to cover, which I think is pretty important, is what is exactly Islamic banking? Because as I sort of mentioned before, there might have been people in conventional that didn't quite understand it or didn't quite know how it works. So I think that's going to be really important. And then obviously the second bit will be more about, you know, what could be some of the sort of banking solutions, the products, the day-to-day banking needs. So I think what I'll probably do, I'm going to move to our next slide. This kind of helps out for the listeners while they're reading, and maybe I'll get you to give an overview of Islamic banking from a very simple ABC.
Sure, absolutely, Gavin. So essentially, Islamic banking is a system of conducting banking activity which has to keep in mind the prohibitions that we have. There is a prohibition on interest. There is a prohibition on entering into transactions where there is a significant amount of uncertainty. And obviously, there are certain sectors that we are quite explicitly not allowed to touch. So, for example, alcohol, tobacco, pork-based products, things of that nature. So it is essentially a system that revolves more around trade and facilitating transactions by means of trade transactions with underlying activity that is required to actually engage into a financing transaction. But there is always a misconception, or maybe I should probably say a lot of focus on it being sort of interest-free, or the prohibition of interest seems to come out more significantly in Islamic banking as opposed to what the actual underlying values are. And quite interestingly, about a couple of years ago, I was doing a course. So after having spent about 12, 13 years in Islamic banking, it was always good to revisit what the actual values are. And Shazad made a great point that you've seen customers, especially since the pandemic, and we've seen this global trend as well, where there are customers that are pretty much focused or have a renewed interest in sort of ESG or values-based systems, and that's exactly what Islamic banking is. Very quickly, some of the things that will probably benefit our business owners here as well. This is about 1400 years ago, at the time of the Prophet Muhammad ﷺ, who himself was a trader. Provided certain ethical guidelines or benchmarks for business transactions, and things such as not lying to sell your business products. So principles of honesty and integrity, honoring your pledges, do not deceive or defraud others. So principles of fair dealing. Do not boast about your products. I mean, there's a renewed interest very recently from the central bank on consumer protection. So these are the values that Islamic banking is based around. Are certain principles or practices that were introduced to us that sort of cover a lot of the developments that are happening in the market now around consumer protection, around ESG and things of that nature. So that essentially is what encompasses and brings us the proposition of Islamic banking, is the values that underpin it.
I think that's interesting because we had a webinar last week that was on Treasury, and that was interesting because it had an element of ESG in there as well, right? And it does seem that certainly, since COVID or post that, during that, there's been certainly a lot more awareness on everybody of how they feel and what they want from their own values. across a spectrum of different fields, and it's nice that this ties into that as well. I'll go on to the next piece, if that's okay. Do you want to sort of explain, I guess, about Sharia Supervision Committee, how it works, etc.?
Sure. So the point of this slide essentially is, there are quite a few questions that our customers or in general people, when they talk about Islamic banking, are, so how authentic is it? How do you make sure that your products are Sharia compliant? So this is why I just wanted to highlight that we are quite heavily regulated in terms of how we operate. We have an independent internal Sharia Supervision Committee. Now, each of those members have to be approved by the higher Sharia authority of the central bank. They are experts in Islamic jurisprudence, and so they are qualified members with experience across jurisdictions on Islamic banking as well, and we seek their guidance. Now, their opinion and their rulings are binding upon us, so we have to ensure that any activity that we undertake, from the smallest financing transactions to the taking of deposits, are under approved structures, approved documentation that has been reviewed by the Internal Sharia Supervision Committee. Along with that, so obviously we have a Sharia governance framework within the bank as well. And these are, again, so the higher Sharia authority of the central bank was formed about 3 or 4 years ago, and they have continued to issue directives to Islamic banks and windows. And we obviously tweak our governance framework around the guidance that we receive from them. And the importance can be highlighted by the fact that our Sharia governance committee includes very senior ManCom members of the bank. That includes the CEO, deputy CEO, the chief risk officer, chief operating officer. So essentially, all the key management members are also present in the Sharia governance committee to ensure that we do comply with the rulings, and that they're regularly updated in terms of developments on the Islamic banking window of the bank. So there is a significant amount of oversight, and we do ensure that our products and any activity that we undertake is approved by our Sharia committee.
I think that, again, for the listeners, I think that that's where, having that sort of, I guess, extra oversight is where it adds a lot of comfort to make sure things are being done in a very, correct manner, and sort of being, checked as well. So I think that adds, again, a lot of comfort for individuals. Do you want to just very quickly sort of maybe give an overview on this sort of basic structures that could be there for the listeners?
Sure. So I won't go into too much detail in terms of how they work, but just in terms of allowing our listeners to be familiar with the sort of products that are available to them. Essentially, the two key underlying structures of Islamic banking are based on Murabaha, which is essentially a sale-based transaction, which includes the cost or the principal amount plus a profit markup. And this is typically used for generating liquidity, whether it's short-term. We do have longer-term revolving facilities that are structured around Murabaha as well. So that, particularly in cases where a tangible asset is not available to you, the Murabaha structure, and typically a commodity Murabaha or Tawarruk structure, is what is used to finance our customers. Ijara is the second structure, which is which sort of contributes to the financing portfolio of any particular bank, and that is basically based around a particular asset. So the financing is structured around either an acquisition of an asset or whether it's refinancing that is required by an entity. So we use an existing asset that they own to conduct a sale and leaseback transaction to generate liquidity for a customer. These are typically done because an asset would typically have a longer term life. These are usually medium to longer term facilities when we use an Ijara structure. And the majority of our deposits are based around something called a Wakala structure, which is essentially that where the bank actually acts as the agent of the customer that is placing funds with us, and it places their funds into our various business activities to generate a return for them. So Wakala product is typically used on the deposit side.
Investment side.
Sure.
Correct. Okay, so great. So what that's really saying is you've got short term, Murabaha.
Right.
You've got obviously longer term or medium to longer term, particularly when you're talking about assets and obviously how long assets can be. And then you've obviously got an investment side as well. That's sort of for the listeners, depending on the listeners' own interests. kind of hopefully gives them a bit of an overview. And obviously, for anybody of the listeners that's interested, we're happy to explain about that in more detail as well to you. Do you want to just finally, before I move to our next speaker, do you want to just sort of maybe then talk about some of the corporate products that fit into there and again, how they might work?
Absolutely. So, I mean, and basic summary of this particular slide is we are able to offer a wide range of banking facilities to our customers. Now, Islamic banking does continue to develop, and accordingly, the offering that is available to our customers develops accordingly as well. So on the liability side, for example, any sort of current account requirements, cash management requirements that customers would have, deposit placing requirements, we are able to meet with the products that we have available. On the financing side or the asset side, as we mentioned previously, so we have your working capital facilities for that have short-term natures. For example, your receivable financing requirements can be met through a Muraba structure. We talked about asset financing, construction financing as well, which is essentially a hybrid product called istisna forward ijara, where if a construction, let's say, of a warehouse or a production facility is required by a business, we enter into this hybrid product, and that is also available to our customers. And if we talk about trade products, so all types of LCs, guarantee requirements that customers have can be fulfilled under Islamic banking. And something that is not talked about too often is actually the treasury products, so the foreign exchange requirements that customers would have, hedging requirements that they may have can be completed through the derivative offering that our treasury experts are available to offer our customers as well. So it is a significantly wide range of products that are available to cover, I would say, by and large, 90 to 95% of the needs of customers that come and have requirements to bank with us.
I was going to say, look, I mean, it's interesting there because obviously if you take the middle piece, the asset side, and you listen to Shazad's sort of introduction around where the UAE economy is sort of, is ramping up, I guess you could call it. There's obviously lots of opportunities within there that ties in relation to, construction, obviously real estate, your manufacturing. So, that really is obviously quite of interest. I think that the treasury aspect, maybe to your point, maybe a lot of people might not know about that, or they're not, aware of actually, is there an offering for that? So, yeah, some sort of interesting pieces there. And again, I think what that shows is there is a whole blended spectrum of options that you might be able to work with. It's probably just understanding this is part of the conversation and the reason for the webinar, and seeing if it does fit with you. So, Tariq, I think that's given us a pretty good overview. And so thank you very much. I'm going to call on our next speaker, if that's okay. Mustafa, are you with us?
Yes, Gavin, I am.
How are you? Okay.
Yeah, doing all right, not bad.
Very good, very good. So again, do you want to just take a couple of minutes? Do you want to sort of explain yourself and obviously what you sort of cover, and then that way we can I can ask some of the more, I guess, forward-thinking technology type questions.
Happy to do that. So I'm basically the head of Islamic finance for data and analytics for the London Stock Exchange Group, and serve as the head of Refinitiv as well. And basically my role is to lead the entire Islamic finance proposition for the organization, providing knowledge solutions and bespoke services to our customers. And we engage very actively with governments, with multilateral institutions like the Islamic Development Bank and other development institutions, and with financial institutions, across the Middle East region, across Central Asia and Southeast Asia on Islamic finance matters. And basically, we provide a wide range of services, primarily focused on knowledge, research, bespoke solutions to help our customers be able to achieve their aspirations in the Islamic finance space.
Great. Well, I think we'll go straight into the first question then, because this is probably something that you can cover given your data analysis and information. But where do you see, I guess, is the biggest growth sector within that sort of Islamic finance, whether that is industry, which I'd be interested to know on that, but also then maybe regionally, and particularly if we then try and break that down into, sort of the GCC.
Sure. No, very happy to talk upon that. And, as was alluded to by Shazad and Tariq, Islamic finance has been one of the fastest growing segments of the financial services industry over the last few decades. It's grown from a niche field to a very, very significant player in many markets. Currently, total assets sit in excess of $3.4 trillion. That's projected to hit 4.9 trillion by 2025. So in less than 5 years from now, it's going to be a tremendous, almost, doubling or increasing by 80% or so. And the largest segment of that is Islamic banking. Islamic banking really is the core of the Islamic finance industry, and about 70% of Islamic finance assets come from the banking sector. It's about $2.4 trillion. And it's a very well developed market. As Tariq alluded to, you have a whole suite of products and services that are available to consumers and to customers across different segments. The industry has grown very, very fast in Southeast Asia and in the GCC. So you have markets like Malaysia and Indonesia and Southeast Asia, and Malaysia is generally regarded as one of the leaders and pioneers in the Islamic finance space. And then you have the markets in the GCC, the likes of UAE, Saudi Arabia, Bahrain, Kuwait, and the other markets. And as you mentioned in your introduction, in a market like the UAE, 30%, almost 30%, both on the deposit side and the asset side, consists of Sharia compliant, banking assets. And then that's something that's very significant. A third of the market being aligned to Sharia principles, and it's something that in the UAE is growing at about twice the rate of the conventional industry, right? So it's one of the fastest growing segments that there is there. And it all comes back to what, Shehzad what Tariq alluded to regarding the underlying value proposition that Islamic finance offers, right? And a greater understanding of that. So increasingly, we've seen in a post financial crisis world where an industry that has value propositions that are built towards avoiding speculation, right, being less speculative, being more certain in the trend, avoiding derivatives, avoiding synthetic transactions, right, avoiding industries that are potentially harmful to the broader community, like gambling, like alcohol, like pornography, and others. Those are values that resonate with both Muslims and non-Muslims that operate in this space. And in many markets, although UAE and many countries in the GCC are Muslim majority countries, a significant portion of the consumer base is not Muslim, right? Like we have all sorts of diversity and people from all sorts of backgrounds. But what we see consistently is that, once people have an understanding of the value proposition that Islamic finance offers, there is a great resonance with their own values. And what we see is that as the significance of ESG investing and other investing criteria becomes more mainstream in terms of market understanding, we see Islamic finance should be in a position to benefit from that understanding by virtue of its underlying elements.
I was going to say, I think you're spot on there. A lot of that comes down to what I sort of said to Tariq, and that is it's the education, the awareness, and the learning of it. And it might be that you only start with one product, and then suddenly you realize about 2 or 3 others, and as your knowledge and your comfortness grows, you sort of expand. I think that sort of brings us on to the next question quite nicely, and that is obviously the element of technology and products that have been introduced into specifically, I guess, the Islamic banking side. Is there any sort of snapshots that you may have or you're seeing?
Sure.
Be interested to know.
No, I definitely. And I think that, again, if you understand the journey of Islamic finance, it helps to understand where the industry is today and where it's going, right? Islamic finance, when it started, in the 1970s and 80s, was very much a financial inclusion play, right? It was very much geared towards bringing in segments of society that did not want to participate in the conventional financial sector. And it was very retail customer specific, right? It was those that were disenfranchised elements of society. But what has happened, and the products as well were very much geared towards mimicking conventional products. And you had, the commodity Murabaha and other such instruments that were there. But what's happened over time is that Islamic finance has evolved to basically be an entirely alternative mode of financing for any type of customer in the banking or financial services space. So whether you have treasury customers, whether you have corporate customers, whether you have SMEs and other institutions, there are products for all of them. And Tariq touched upon a couple which are the largest products. The Muraba and the Ijara. This makes up probably 70% of Islamic financing activities, right? But there's other products that are coming that have evolved in the last few decades. So products like Istisna, which Tariq also mentioned very briefly, is a product that can be used to create any kind of manufactured good or any kind of building or anything that is constructed. We have Salam product, which is used a lot in markets where agriculture is a significant part, to finance the development of agricultural produce. And now that has been innovated to be utilized in some markets for the production of aluminium, which again, has homogeneous properties. And in other markets,
Yes.
it can be utilized for even the production of electricity, which again has homogeneous properties. So there is constant innovation on the product side where you can take these concepts and really, as Tariq mentioned, the Prophet ﷺ was a trader himself. And when,
Yes.
they introduced this entire stratosphere of Islamic economics, it was with the concept of promoting economic activity, promoting trading, promoting businesses. And as scholars have looked at addressing challenges, they're always able to find products that can help cater to those needs, as long as you don't compromise on the core principles.
The
Now,
values. Yep.
one of the things that Shahzad mentioned, which is very interesting in his thing, was the challenges for SME lending, right? And we know the traditional challenges, which are, lack of track record, lack of tangible assets as collateral. There's so many uncertainties and unknowns. But what has happened now increasingly is, with the advent of technology, people have developed alternate credit rating criteria and alternate credit scoring criteria. Now, that is something that can also be utilized on the Islamic finance side, and is being utilized on the Islamic finance side. And because the risk metrics are different, because it's not a pure credit risk play, there are other assets there, there's other production there, there's other risks and rewards there. These technology tools can be utilized to create customized screening methodologies for Sharia compliant products that can help, great significantly provide more inclusivity for some of the SMEs that would have otherwise been excluded from conventional financing products.
Yeah, I was going to say, and that's kind of where you tend to come as it evolves. You tend to see other innovative, whether it's products, whether it's sort of technology pieces that attach in. And so as you mentioned about how big the market is going to grow, you can only see that area is going to grow quite considerably as well. What do you think is, I don't know, education, we talked education as one piece. What do you think is the showstopper, if I can use that word, of why maybe people don't use Islamic products a bit more? Is it education? Is it, or is this underlining other reasons?
I think awareness and education is the predominant challenge, right? And if you think of us as a society today, even in terms of general financial literacy, right, that is a major challenge for anyone that is looking to do SME lending, right? Financial awareness and financial literacy is always one of the first things that is tackled when you're dealing with SMEs, particularly SMEs that are looking to scale very fast, that don't have that capacity and that talent available to be able to support that scaling, right? So it's the same thing for Islamic finance. You need to have that financial literacy. There are certain perceptions related to Islamic finance that are, may have been warranted at one point in time, but not today, in terms of it being very rigid, in terms of it being very, misaligned with business needs. There's a whole other spectrum of people that expect Islamic finance to be some sort of a charitable endeavor, right? That simply because it has the name Islamic in it, somehow, the people are offended at the fact that the financial institution is, trying to make money off of these products, right? And they perceive that this should be some kind of charitable venture, right? So there's a lot of different perceptions that exist in the market, and particularly in the SME side, the lack of financial literacy, the lack of awareness is a challenge for the broader SME ecosystem that there is. But then when you add the complexity of Islamic finance, and we love to use our terms like murabaha and ijara and others that kind of confuse the end consumer. But I think that the onus is also on us to simplify an understanding of what these products are, how these products work. And I think that Malaysia took a very strong step in trying to achieve that, and they've seen the growth in their markets in terms of adoption of Islamic finance, right? Saudi Arabia has taken a big step in that direction to try to, increase understanding and awareness of how these Islamic products work. And we see tremendous growth in Saudi Arabia. Islamic banking assets, although it's a dual tier system with both conventional Islamic banking assets are in excess of 50% of banking assets, right? So you see that adoption coming when you have greater understanding, awareness, financial literacy, and you understand the value that these products can bring compared to some, perceptions that you may have.
Look, I was going to say you've actually probably covered point 4 there, so you kind of hit you covered 2 aspects. I think for the listeners, this is why I guess we're holding a webinar like this where we can help the listeners who may have some interest, they might have some knowledge, they might not quite know some of the aspects, and part of this is that evolution of education, which helps them to be able to break down some of those barriers that were maybe there. And then also what you tend to find is it kind of becomes a bit of a domino effect. If you've got, friends or colleagues that have used it, you tend to feel a bit more comfortable for you to then use it. And particularly within business, if you're working with business people, you have another business person from a different network that's maybe used it, all of a sudden it becomes a bit more of an easier comfort inroad than it is if you're going, fresh. So look, Mustafa, I think that was great. That really gave us an overview. So thank you very much. I'm going to get all of the speakers just to put your audios back on, and I'm just going to ask the members of the audience if they have any questions. Again, just to remind them to pop it in the Q&A tab. I actually have 3 so far, so I will sort of fire these out, and I'll pick somebody who can maybe answer them, and then maybe ask each one. So. Tariq, I think I'll ask you if that's all right to start off with. One of the questions that's come through is, are companies under non-Muslim ownership edible for Sharia-compliant banking?
Oh, absolutely.
So sorry, I couldn't quite hear you cutting out there. Sorry.
Sorry. I guess the simple answer to that is absolutely yes. And Mustafa alluded to this as well, that there are quite a few consumers of Islamic banking that are non-Muslims. And again, it all centers around the value-based proposition that is available. And quite frankly, I mean, there's a number of banks here that are purely Islamic banks, and for a lot of the customers in the market that are looking for liquidity, the pool that is available to them is a mix of both conventional and Islamic. So there are a number of non-Muslim owned businesses, both on the corporates, obviously on the corporate side, and as also individual sort of retail financing customers that choose Islamic banking products as well. So there's absolutely no restriction in terms of what the ownership profile is like for us to stop them from benefiting from Islamic banking products.
But Mustafa, I guess from your data, you might actually have some analysis on this those that are maybe from a non-Muslim background that have actually had interest in that. I don't know whether you have some of those broad line figures or you roughly know off the top of your head, but certainly there's probably some interest.
Sure, no, definitely, and I mean, to get the data in the underlying banking sector is a bit challenging, but what we look at, is, for example, capital markets, right? So if we use Sukuk, for example, as a proxy, Sukuk is a Sharia-compliant fixed income bond, essentially. And if you see the ownership structure for Sukuks, more than 50% of Sukuks are held by what would be considered non-Islamic investors, whether that's institutional, institutional banking, or investment firms that are based in non-Muslim countries, or family houses or other investors that are non-Sharia compliant, right? And again, it all gears to, as Tariq mentioned, to the value proposition, right? They see a value proposition that they align with. They see a commercial transaction that is attractive from an investment point of view, and therefore they're happy to do that. And in my own interactions, I mean, I speak to most of the banks in Malaysia and the UAE and others. In Malaysia, one of the largest segments of the Islamic corporate banking customers are Chinese-owned businesses, and they are not.
Okay.
And they're not, Islamic in terms of either culturally or religiously aligned. But many case studies have been done on the interest of why so many Chinese-based corporates are looking at Islamic finance and preferring Islamic finance to conventional finance. And again, it comes back to that value-based proposition, because these are humanistic values. These are shared values across multiple different types of communities. So there's no restriction whether it's to take a loan, whether it is to place a deposit. So whether you're coming on the asset side, liability side, there's absolutely no restriction on any consumer, whether Muslim or non-Muslim, to be able to access Islamic finance.
And I think Shazad obviously mentioned at the start when I asked that question about are there people moving from conventional to obviously Islamic. Some of those might actually be non-Muslim individuals that are just interested in the differences, to go from there. I think we've got time probably for maybe 2 more questions. So I'll sort of fire this out and see how we go. So Mustafa, I'll probably start with you if that's okay. Is Islamic banking suitable for international trade-related transactions with countries where Sharia-compliant banking is not too active? So Sharia to non-Sharia countries.
Yeah, so it is. So first off, straight off the bat, one of the things that I would want to mention is there are actually 1,600 Islamic banking institutions that operate in the world today in 80 countries around the world.
Big number.
Right? Yeah, exactly. And in 80 countries around the world, you have 47 different countries that have introduced some form of Islamic finance regulation. So globally, there is this push for Islamic finance to be proactive in most markets. And you will find Islamic banks in South America, you will find them in Australia, you will find them in Sub-Saharan Africa, in Central Asia, all over the world. You will be able to have access to banking institutions that can provide Sharia compliant services, right? Now, when it comes to the matter of facilitating trade finance, obviously there's a concern that if you're operating with a country like India or China or any market where perhaps it's easier to go the conventional route, the Islamic banks, by nature of the product structures that they've developed and by nature of the banking relationships that they have, they should be able to offer you that facility. So most Islamic banks are able to offer facilities where you can do trade finance in a Sharia compliant manner with a market that would not intrinsically feel like a market where Islamic finance is prominent. And the same is true vice versa. So, the likes of many of the large multinational banks, so the Citis, the Standard Chartered, the BNPs, etc., they also offer Sharia compliant trade finance solutions to their customers in the GCC for these markets. So, Islamic finance has come a long way from where it was, even a few decades ago. And today, there should be no restriction for companies that want to do trade finance in a Sharia compliant manner with most countries in the world, if not all countries.
Great. Tariq, just a one quick question. What sort of, and you might be able to say a couple of points, but what advantage does Islamic finance hold over conventional or traditional finance? I guess if you to pick 2 pieces.
Well, I can tell you that Islamic banking at this point in time continues to be a young, innovative, growing sort of offering, as opposed to let's say the conventional offering. I mean, in the UAE, the market share that Islamic banking continues to sort of take.
Sorry, Tariq, I think we're losing you a little bit. Sorry.
Is that a bit better?
Yeah, probably a bit closer. That's all.
Okay. So yeah, what I was saying is, because of the I guess the additional steps or the challenges that Islamic banking has to address through their products, by the very nature, they're always looking for additional solutions, additional innovative offerings that can be made available to the consumers. So it is a young, sort of developing, progressive offering, as opposed to, let's say, the tried and tested mechanisms under conventional. So I think that definitely positions Islamic banking as an offering that can continue to sort of evolve and look at things in a way that are sort of consumer focused and offer those value-based propositions to our consumers.
Yeah, well, I think if you take those numbers that obviously Mustafa mentioned beforehand in terms of the growth rate, I think that shows you exactly where maybe some of this can go and where it's heading. And I think to your point, that the added piece there is also that ESG element. I think that plays to heart to a lot of people. I think the final question, just very quickly, and again, Tariq, I'll start with you if that's okay. But somebody's mentioned about the potential of green sukuks. Is that sort of an emerging trend here, an emerging trend globally, just as an overview?
Absolutely. So, as we've been discussing throughout this call, there is a very strong connection or tie-in between Islamic banking and your sort of ESG offerings globally that have seen a rise, particularly post-pandemic. Pretty much all the larger banks around the globe have, made an effort towards addressing the issues around ESG. And because Islamic banking's values have always sort of centered around and sort of fit in very well with sort of ethical behavior, making sure that any activity that you undertake is actually creating value for the economy. And because of that, it ties in very well. We have seen a number of offerings of green sukuk, and just the global trend towards ESG and just the way that Islamic banking ties in with that, I believe that will continue to grow and evolve. So a number of sukuks that we see going forward will most likely have that green or ESG element embedded into them.
Very good. Well, look, I just thought I'd just sort of wrap up. Is there any sort of parting comments? I don't know whether I can get a comment from you each just before I sort of wrap up and thank you all. Tariq, is there anything you'd want to say just as one snap sort of overview for the listeners?
Oh, no, just I think just in terms of summarizing what we've been trying to convey to our listeners is there is an extensive offering available to consumers. It is a very much refined and developed offering as, let's say, what was available 10, 15 years ago. So if somebody has not had a positive experience way back, we have certainly improved the offering that is available to our consumers. And because it is structured around a value-based proposition, it is not only avoidance of interest. There is a lot more that goes into structuring of an Islamic document, and that essentially ties in with consumer protection and the values that we want to espouse towards the growth in the economies overall.
Great. Shahzad, anything you'd like to maybe just say as a 1-minute parting comment?
Yes, sir. First of all, even thank you, Tariq and Mustafa. It was very great, and Tariq taking care of like the entire products in a short time of time. So even if a non-Islamic conventional customer or conventional or participant can easily grasp this Islamic product, and we also feel that Islamic is going a big way, and this is the requirement of UAE, and they want to create like an Islamic hub, next
Very
to
good.
Malaysia. So
Great.
all the best for the Islamic guys.
That's great. And Mustafa, I'll give you the last word then.
Thanks, you, Gavin. And, I just want to reiterate what Tariq and Shahzad have just said, that there is tremendous growth potential for Islamic finance. It is, as Tariq mentioned, there is a value-based proposition there that we encourage everybody to look at, but there is also many, many decades of product development that have gone into creating a whole suite of solutions that can be used to cater to your needs. So, what I would mention to all the viewers is that if you have any interest, find out more about it, look into it, and I think you will be pleasantly surprised as to all the different, activities that you can perform in a Sharia-compliant, value-based way.
So to the speakers, thank you very much. I think that's very obviously educational for the listeners. And like I said, if anybody has any questions, please feel free to reach out to us. To all of the listeners, thank you very much for joining in. Please stay tuned for other upcoming webinars, and obviously follow us on our social trends as well. But to Tariq, Mustafa and Shahzad, thank you very much. Hope you have a great rest of the day, and we look forward to speaking to you soon.
Thank you, Gavin, for having a fabulous seminar.
Thanks, Gavin. Thanks, everyone. Take care.
Bye-bye.